Hey everyone, welcome again to a short video courtesy of investingsuccess.ca. Today is the 18th of August 2023. In this video, I want to take a look at a particular stock, and I think you've already figured out which particular stock. You probably own a number of the products displayed in this slide here. So from the Apple Watch to the Apple phone to the Apple iPad to the Apple laptop, their products are ubiquitous, their products are global. Yeah, the company has been a runaway success, and people actually are defining themselves, they're defining their persona by the number of Apple widgets and gadgets that they are in possession of. Now, I want to take a look at Apple through the lens of astrology. So let's start with declination. So in my writings and in my various videos, you know that the planets orbit the sun in a plane of motion called the ecliptic plane. And the planets, as they orbit the sun, are not perfectly balanced. They do wander above and below the ecliptic plane. And so if you were positioned on the sun, you would see the various planets going around the sun. And you would say, with respect to a planet that was above the ecliptic plane, you would say, oh, that planet has got positive declination. For a planet that was below the ecliptic plane, you would say that planet has got negative declination. Now, in terms of Apple, it made its IPO date on the 12th of December 1980. Here's a picture of Mr. Jobs. Now, on that particular date, Venus was at minus 2 degrees of declination, Mars was at minus 21. Why is that important? Well, as Mr. W.D. Gann and various other writers over the years have reminded us, declination is not something that you look at using a sharp pencil. Declination is something that you best look at using a blunt instrument like a fat crayon or a fat marker. In other words, you have to look at these declination points and give them some tolerance, a little bit of leeway. So if Mr. W.D. Gann was sitting here with me right now, he would say, oh, very simple. At the Apple IPO date, Venus was at, for all intents and purposes, 0 degrees declination, and Mars, for all intents and purposes, was at its minimum declination. Okay, so that's how Gann would look at it. Now, why is this important as well? Well, if you think these IPO dates are just randomly selected by some secretary in an office somewhere in New York, no. There are people in the hierarchy on Wall Street that define these IPO dates. These are people who are very well steeped in astrology. They certainly would have been in 1980. And they would have picked the 12th of December, very likely because of Venus being, for all intents and purposes, at 0 degrees of declination and Mars at its minimum. And this actually then sends out a signal. It creates a roadmap for greater Wall Street. And there are players on Wall Street who are very steeped in astrology. And they would then use these planets, specifically Venus and Mars, being either at 0, minimum, or maximum declination as points in time when a trend change could be implemented. Okay, and so these guys then have, free license to use Venus and Mars as they pass declination extremes to implement trend changes. The average person on the street, they have no idea what's going on. All they know is that the price of a share has changed its trend. But the insiders, they've got one up on everybody who doesn't understand astrology. And by the time everybody flies into a panic out there and starts selling, the guys on the inside have made their money, and they've used astrology and declination to do it. Now, here's the other way that I use astrology. I have a program called SolarFire Gold, and I use it to generate first trade horoscopes. And so in the case of Apple, I said to SolarFire Gold, show me the distribution of the planets in the cosmos at December 12th, 1980, 9:30 in the morning, New York City. And here's the chart. Now, the first thing I do on any of these first trade charts is I'm going to start looking to see, are there any unique geometric patterns in the chart? And right off the get-go, yeah, there is one. And so the chart is showing me that I've got Moon at 19 of Aquarius, I've got the natal node at 13 of Leo, and I've got the natal midheaven at 17 of Scorpio, and also I've got the ascendant at 23 of Capricorn. So if you join the midheaven point to the moon point to the node point, yep, there's your triangle. So what I say to myself is, okay, during a monthly lunar cycle, what happens when Moon passes the corner points on one of these geometric patterns? So in the case of Apple, is there an inflection point? Is there a change of trend when the Moon passes natal Moon, or when it passes the natal node, or when it passes the natal midheaven? I also look and I say to myself, what happens when Sun and Mars in particular, when Sun and Mars pass the natal ascendant, the natal midheaven, and possibly the unique corner points on any geometric shapes? Is there a change in trend? Is there a price reaction? Does human emotion get perturbed? And I'm using technical chart indicators like the True Strength Index, slow stochastic, fast stochastic, and I'm looking for a change of trend that I can capitalize on. All right, so here's a chart then of Apple, and I've just gone back to January of 2023. And so we can see that in late 22, the price of practically everything was declining. But in the case of Apple, it reached a turning point early January. So what was happening that would cause human emotion to change so abruptly early in January? Well, we had the Sun passing the natal ascendant in that first trade 1980 horoscope. We had the midheaven, I think it was on the 3rd of January. The midheaven was at the natal midheaven. And we had the Moon passing the natal node point. So 3 cosmic occurrences, and that was enough to sway human emotion, and it was enough to get people to start buying Apple at $125 a share, and then they pushed it up to almost, well, just over 150. So to continue on, I've gone on and added various other Moon natal node points, and I could have focused on Moon passing the natal midheaven, Moon passing the natal ascendant. I didn't want to clutter the chart too much, but take a look at the Moon natal node points. There's an inflection point. There's an inflection point in April. There's an inflection point in May. There's an inflection point in June. Were any of these inflection points big enough to sway the market and get it to really change trend? No, they were not. And then at some point in June, some smart person on Wall Street woke up one morning and realized, Apple is getting very close to a $3 trillion market cap. Is it possible that it could get there? Well, you know what? When you hear Wall Street asking stupid questions like that, just assume that the answer is yes. They wanted to give Apple a $3 trillion market cap, and they were going to keep bidding it higher until they damn well got their $3 trillion market cap, and they got it. But did it hold? No, of course not. So why didn't it hold? What happened? Well, I started warning a couple weeks ago that the month of August was going to be gnarly. We had, aphelion, perihelion events with Mercury. We had Mercury retrograde. We had Venus at inferior conjunction. The month of August is just chock full of these sensitive trigger points. And so in the case of Apple, they pushed, got it into nosebleed territory. They got their $3 trillion market cap. Good for them. But then just like a pair of switches, Moon passed the natal ascendant, Sun passed the natal node in that 1980 horoscope, and boom, that was it for the $3 trillion market cap story. The price of Apple fell. Now it's going to continue to fall until it finds some semblance of equilibrium. Don't know where that is. Could it be 170? Could it be 150? Don't know. But the technical chart indicators will let you know. And where it ultimately finds equilibrium will align to something pertaining to astrology. It could be something pertaining to declination. It could be something pertaining to Sun passing the natal node, Moon passing the natal nodes, Mars passing the natal midheaven. I don't know. But there will be some connection to astrology at the point in time when Apple finds equilibrium and settles down. Now, at the peak, I'm going to call it August 1, Mars was at 0 degrees of declination. Remember that in the 1980 natal horoscope on December 12, 1980, we said that Mars was at its minimum. And so here's a significant peak on Apple, and here's Mars at 0. That's curious. In 1980, we said that Venus was, for all intents and purposes, at 0. Well, here's a major turning point. Venus is at its minimum. So you see, there's always going to be this curious connection at these major turning points. And this is what W.D. Gann was trying to warn us about in 1927. And so here's a classic example of how that happens. And you can go and look at any of the examples in my almanac, and I'll show you on wheat, corn, soybeans, gold, silver, crude oil, major inflection points. There is always some connection to that natal declination of Mars and Venus. This is no accident. Believe me, it is no accident. Now, I said that this video was going to have a little bit of a warning. We have come through a period that we will probably never, ever see in our lifetimes again. We came through a period of, let's say, money for nothing. Corporations were well aware of money for nothing, and they took advantage of it. And Apple was no exception. So if you read their financial statements, and in my humble opinion, we need to turn off the television and we need to start looking at the 10K filings of corporations. And it's a bit of a skill to look at these things and navigate through them. But the information you're looking for is all there. It always is. So in the case of Apple, I've looked at some of their 10K filings. And you know what? This company has got $76 billion in debt, and it's coming due in the next 1 to 5 years. And then they'll tell you they've got a tranche of this stuff coming due in 2024. It was initially taken out with a coupon rate of 1.375%. Money for nothing. Somehow they managed to even at one point engineer something with a 0% coupon. It was money that they offered at some sort of a discount, and it matures at par. So here's another tranche in 2025, less than 1% interest. 2026, 1.625%. Here's another tranche in 2027, 2%. 2029, 1.375%. I mean, these guys knew what they were doing. People actually thought, and when I say people, I'm talking pension fund managers, they actually thought interest rates were going to stay at or near 0 forever. And so that's why they were buying tranches of debt and feigning to be happy with a 1.6% coupon. I mean, these pension managers, they are not the sharpest knives in the drawer. I would even go so far as to say some of them are quite stupid. But not Apple, not Tim Cook. He took advantage of it. But now, this is where it's going to turn and bite Mr. Cook square in the arse. There is a shitstorm that's bearing down on Tim Cook. He, at some point in the next 5 years, and he's telling you, he's got to refinance and roll over $76 billion in debt. He ain't going to do that at 1.6%. He ain't going to do that at 0.876%. No, not at all. The average interest rate that I can see from the Apple financials is around about 1.2%. And I don't know the actual breakdown of individual tranches to see how much is at each interest rate, but the average looks like it's about 1.2%. Apple pays around about $11 billion every quarter in interest on its debt. What did it do with all of this $76 billion that it brought in at ridiculously cheap coupon rates? Apple used that to buy back its own stock. It's been buying back $50 billion in shares every quarter using its cash flow from selling Gidgets and Gadgets, using some of this debt financing money, and they've been slowly whittling down the number of shares outstanding, but they still have almost 16 billion of these things outstanding. So they got a long way to go if they want to get their share count down to a comfortable semblance of something normal. But you know what? Here's what's happening right now. The average AAA rated corporate debt has a coupon of about 5%. I think interest rates are going to go just a little bit higher yet. And I say that Mr. Cook is facing a shitstorm. Yeah, he is. When he starts to roll over this debt, it's going to really hurt because he's going to be doing it at a good 5%, maybe even a little bit higher. So no longer will he be paying out $11 billion in interest every quarter. That is going to dramatically increase. Do some simple math. Their quarterly payments that they're making on their debt could go from 11 billion to 40 billion. It could really kick Apple in the shins. It could cripple these guys. And they probably took on a little bit too much. They gorged a little bit too much at the trough, if you want to look at it that way. But they were just taking advantage of some stupid people out there who really thought interest rates were going to remain at zero for the foreseeable future. And they took advantage of it. Now, there's some people on Wall Street that are a lot smarter than me. They're called analysts. And at some point, and I suspect it's already started, the analysts are going to start to factor in these higher debt costs into Apple's share price targets. Apple itself makes up 11% of the weighting of the NASDAQ index. So goes Apple, so goes NASDAQ. And as the analysts start to pare back on their price targets, that's going to weigh heavily on NASDAQ and the S&P 500 for that matter. So when all of this is really going to start to ravage Apple, you'll hear about it when you start to hear the analysts weighing in with their price targets and whether they are neutral weighting or underweighting Apple shares. Now, November of this year, you've got Mars and Sun passing the natal midheaven. Is that when we start to hear some analysts voicing concern? Maybe. Don't know. But start to look now for these various roadmap points. Start to look for declination, having some sort of a curious relation to the natal declination. There is going to be a date in time here in the not too distant future when you start to hear some negative sentiment concerning Apple, and it's not just Apple. I'm certain that if I was to look at the 10K filings for NVIDIA and some of these other big tech names, I'm pretty certain I'm going to see the same debt profile where they gorged at the trough and they took on huge amounts of debt at ridiculous interest rates. Well, interest rates are no longer ridiculous. They are high, and all of this stuff has to be refinanced. And I do think there is a shitstorm coming, and it's not going to be pretty when it ultimately hits. And so the question that I'm going to leave you with today then You've heard me talk about the 18.6-year cycle. You've heard me talk about Louise McWhirter. The last 18.6-year cycle was 2008, and we know that the theme of the end of that cycle was subprime mortgage debt. And it was ugly. It very nearly took down the entire capitalist system. And governments were forced to step in with their TARP programs and rescue programs. And, Wall Street was saved. Well, have we learned our lesson? Apparently not. Here we go again. I think the theme of the next 18.6-year cycle end is going to be corporate debt. And I think that the shitstorm that is coming is going to define the end of the 18.6-year cycle, which, by the way, will be Node moving into Aquarius. And that's going to happen in, late 2026, 2027. And if you just look at the tranches of debt that I showed you here on Apple, yeah, that's when the heart and soul of it really hits home. And it is going to be ugly. Now, will Apple survive? Sure. Will the price of Apple stock be $180 a share? Probably not. But here's what you got to watch for. There's going to be companies out there that don't survive. They're just not going to make it. They don't have the cash flow to allow them to carry debt repayment schedules that are 4 and 5 times what they are right now. So there's going to be some angst, there's going to be some tears shed, and I do think that all of this is going to be part and parcel of the next 18.6-year cycle in the next 2.5 to 3 years. Okay, you're probably stressed out. Don't be. These 18.6-year cycles come and they go. The key is to be aware that they're coming. The key is to be generally aware of what the theme is. And you now know what I think the theme is going to be: corporate debt and rising interest rates, higher interest rates. And I think the assumption that interest rates are going to start gravitating back down to near zero, I don't think Jerome Powell is going to let that happen. And things are going to get a little tense. So don't forget to visit me at investingsuccess.ca. I've got my astrology letter, my cycles report. And for those of you that follow me on Substack, I'm posting a lot of stuff that I otherwise write about on Substack. I've got the first draft of the 2024 Almanac sitting on my desk done. I got to go back and do some edits on it before I get it to my publisher. The 2024 version is greatly simplified. And then you know what? Louise McWhirter in 1937, I finally have come to conclude, yeah, she was right. It's all about the moon. You can complicate this astrology any way you want, and there are people out there who do a fine job of complicating it. They talk about planets moving through different houses and different signs and God knows what else. It's all about the moon. McWhirter was right. And really that's the focus then of the revised 2024 Almanac. I show you when to expect major changes on commodities and on market indices, and I strictly focus on the moon, and I just leave it at that. And don't forget, my courses are on udemy.com, and my most recent book was Follow the Trend, where I talk about the various chart indicators that, in my opinion, have to be used part and parcel along with astrology, and put it all together, and you've got some very powerful tools at your disposal. All right, so don't let what you've just heard about a coming shitstorm keep you awake. Just be aware that it's coming, and as it starts to hit, just remember you heard it here first, and make sure that you are amply prepared for it. And if that means having to sit on cash for a while, don't be embarrassed to admit that you're sitting on cash, because these storms are best avoided, and they are best viewed from the sidelines. Okay, guys, thank you kindly for taking the time, and we will talk very soon. Take care.